The Toronto Real Estate Board put out a forecast back in January of this year that we were going to see a steep climb in sales by up to 17%. And lo and behold, the numbers for February just came out and sales volume was up 17%. Now, normally they're not right. Normally they're way off with their analytics and predictions because, well, who can tell anything these days? But we know for sure that affordability has not gotten any better. In fact, affordability is the worst that it's ever been. So how are all these homes getting sold when interest rates are still really high? And even if there is a light at the end of the tunnel in terms of interest rates starting to come down this year, it's not going to be by very much. Maybe we can expect a couple quarter point drops, but overall, it's still going to be pretty expensive at these prices, and prices really aren't moving. So what is going on? Who is buying all of these homes? In this episode, we're going to break down the numbers. So let's get into it. Hi, my name is Adam Nadler. I'm the owner of Vision Real Estate. Thanks so much for tuning in yet again. And if you haven't yet, please feel free to hit that subscribe button below. And don't forget to hit the like button so this video can be pushed out to more people like yourself. And if you'd like to chat about real estate going into a very most likely busy spring market in 2024, feel free to click on the first link in the description below. That'll connect you to a calendar where you can book a time to chat with me at a time that is most convenient for you. Or if you have any questions, you can feel free to just email me directly to adam@visionrealestate.ca and I will send you a video response within 24 hours. All right, let's start off with affordability, because although a lot of people are trying to hype up a pumping market going into the spring, which actually does seem to be happening with sales volume increasing very quickly, we still have not gotten any better with affordability. In fact, it's gotten quite a bit worse. At the current rates and average price we're seeing in Toronto, the household annual income needed to afford a representative home at the average is $261,000 a year. And let's say you're not going for a home, even for a condo, you still need a household income of $179,000 a year to afford that. Now, to put that into perspective, let's say that you were putting a very small down payment on a home like that. The months of saving required for a down payment is 306. And for a condo, it's 59. It's basically impossible for this current generation to get into the housing market without help from the bank of mom and dad. But sales volume is ticking up, and not by a little bit. Year over year, February of last year compared to February of this year, we have seen sales up by 17.9%, which is exactly what the Toronto Real Estate Board was forecasting. And as for price, well, year over year, it didn't really move much. We saw an increase by 1.1%, and month over month, we saw an increase of 1.3%. So we're still hovering a bit of an increase there. But overall, what we're seeing is a completely untraditional market. We're not seeing seasonal trends like we normally would at this time of year in Q1. In terms of the influx of new inventory coming onto the market, this has been a much busier Q1 than we saw last year. Total new listings were up by 33.5%, and the sales to new listings ratio was down by 7%, meaning that we see a lot of activity on both sides of this compared to Q1 of last year. We see a lot more listings hitting the market, but a lot more buyers coming to meet that supply. So our market is kind of thawing a bit. It was really frozen for about the past year. And if we looked at Q1 of 2023, it was frozen solid. So we're seeing things thaw up a bit. We're likely going into a busier spring market. But the question is how and why? Affordability is worse than it's ever been. And the answer that is simply just glaring us in the face is immigration. Canada has seen immigration skyrocket to numbers that are unheard of for Canadians. We have essentially doubled what the record was in the last couple of years, and we're not really slowing down. But all of these people need places to live, and we're not really building. On average, Toronto builds about 35 to 38,000 units, but because of all the red tape, COVID, supply chain problems throughout the pandemic, as well as labor costs and material costs going up, we've seen our building basically grind to a screeching halt over the last couple of years. Last year, we barely hit 30,000 units, and this year, we're hopefully going to do a little better, but we're still nowhere near what the actual demand for housing is going to be. Last year, we took in almost 1.2 million immigrants. And for Toronto and the GTA, we see about half of those people come here because this is where all the jobs are. Now, of course, all of those people can't afford to buy houses, but we know that of all of our immigration, about 60% come in on economic programs, meaning they do have some money when they come here to actually buy property, but rates have been too high. And because the market's been extremely tumultuous, people have simply been waiting on the sidelines, and it seems no longer. They've had enough time here renting to build up some credit, and now they can actually get a mortgage and put their money into the housing market and stop paying someone else's mortgage. And so this is what we're seeing. I've been speaking to a ton of mortgage brokers who have been seeing applications from new residents that are coming to Canada. And that is what we're seeing on our listings as well. A lot of offers coming in from people who are new to Canada. So are we going to be approaching a busier spring market? Most definitely. If the rate of the sales volume increase continues like this, we are looking at a crazy market moving into the spring, and hopefully things start to cool off on the tail end of the summer like it normally does seasonally. But hey, we haven't seen seasonal trends for 3 years in this market, so who knows? But that's just what I think. Let me know what you think in the comments below. Do you think it's going to be a busier spring and possibly then a correction? Or do you think we're just heating up for a grand old ride for a hot market all the way through this year? Thanks again for watching, and I'll see you next time.